Hey everybody, it's Wednesday the 17th. That was a heck of a ride for the market today. Let's take a look here. We came down immediately through that prior support, and as I had mentioned in the chat room, that we often get a move below there, and that we get reversals. We did get a very nice reversal through there, and we came up obviously through today's VWAP, through the 2-day VWAP, and up to the week-to-date volume-weighted average price as well. We're also just below this 5-day moving average, and I still think that this is the key level that we need to get back above to become bullish. This market is intermediate term, more neutral than anything, and longer term, still in an uptrend. That's why we don't get bearish after each little blip lower. We look to the market and say, what is most likely? Where has it come from? Where does it have the potential to go? That's why we didn't want to get bearish below that low, but instead look for the reversal, and it again rallied very nicely from there. So on that daily time frame, again, this is the bigger level. As long as we continue to close above that in the 20-day moving average, buyers remain in control of the longer term trend. It's the intermediate term trend that's just giving us a little bit of trouble here, but the path of least resistance overall is higher. We had mentioned the potential of a bearish scenario for the NASDAQ, which did not occur. We got back above all those volume weighted average price levels that were clustered together in here at 117. And now I believe that what we really have to do to get back to positive is probably back above 117 and a half. The one thing we know for sure is that 116 and a quarter-ish is the support that we want to keep an eye on. If that level breaks, then our intermediate term trend will have turned bearish, and we'll be looking for a deeper pullback. A pullback within a primary uptrend on a daily, weekly, monthly time frame. You just don't want to fight these bigger trends for these little pullbacks that tend to resolve themselves back to the upside. But again, 116 and a quarter, 116 and a half, that's our band of support that we want to see continue to hold. We're neutral in here right now, and back to positive above 117 and a half. The Russell 2000 came down to the level that we wanted to see hold as support, and it in fact did hold as support. Now to get back to positive upward momentum, we're going to need to see it back above 122.75 and holding there. That obviously gets us back above that rising 5-day moving average as well. If we were to break below and hold below 121 and a quarter for more than a half hour or so, then we would look for the potential of a deeper pullback here. But again, the primary trend is still higher. This prior resistance in here, though, is holding a support, and it's the 20-day moving average. So we would have to take it seriously, at least from an intermediate term perspective, if it were to break down and hold below that level. The semiconductors were down a dime. They pulled back to this prior resistance from last week, and that in the end did hold as support here on a closing basis. And on the daily time frame, of course, we're in a massive uptrend. People have been trying to pick the top here to no avail, and there's really no reason to try to pick a top when we're still seeing that we have a rising 5-day moving average, and we're not seeing closes below that 5-day moving average. So in here, some further consolidation through time would make sense for the semiconductors. If we break down, then it seems like 64 would be the next potential level for this market to hold. But again, with as extended as this market is, we'll see how it behaves if it breaks down. And that's the big thing, is we don't want to get bearish until it breaks down and we see a pattern of lower highs and lower lows below a flat to declining 5-day moving average. Biotechs, as we mentioned, had pulled back a little bit further here, so the people who bought that 5-day moving average, obviously, again, we don't buy pullbacks. We look at a pullback and look for evidence that the buyers are in fact gaining control, and in that area there was no evidence that the buyers were gaining control. Our week-to-date volume-weighted average price for the biotechs is up near 293. Today's volume-weighted average price and the 2-day volume-weighted average price are just, we've kind of sandwiched between them here late in the day. For us to become positive on the intermediate term time frame, I think what we need to do is get back above 293.50-ish. If we can get back above and hold above there, then we're going to turn back to positive on the intermediate term, which would confirm this daily uptrend. And that would say, we would then be able to say, yes, we have successfully held support at this prior band of resistance. Right now, it's searching for that support. It's not quite clear that it will, in fact, hold as support, and it's not clear that the market will bounce from here. So there's no point being long in the biotechs. Apple continues to hold up. Again, I think that if you're long here, then stop probably goes below 108.